Ignition. We have liftoff.
Are there any Grab shareholders out there? It feels like it's few and far between. I feel like I'm alone out there. Nobody's interested in Grab. Well, earnings did just come out, and the stock really didn't move. So, what does that tell you? Mediocre earnings at best? We're going to take a look at that. We have a lot to talk about with Grab. We have to talk about the earnings that just came out. There could be some mergers upcoming, maybe some acquisitions. We're going to go into those details. The analysts, they're bumping up the stock price. They want to see this at 7. We're going to go get into that here in a second. Citibank, they're increasing their shares big time. And Grab might be making a strategic investment in a remote driving technology company. We got a lot to get into, so let's go. Grab Holdings for quarter 3. Revenue of $873 million meets estimate of $873. GAAP EPS of 1 cent meets estimate of 1 cent. And this is just why the stock didn't really move at all. Didn't drop, didn't go higher, staying steady. Now revenue, $183 million. Year over year change is 22%. So revenue grew 22% year over year to $873 million, or 17% on a constant currency basis, driven by growth across on-demand and financial service segments. Now, on-demand gross merchandise value rose 24% year over year to $5.8 billion, supported by higher user transaction and GMV per user. Adjusted EBITDA increased 51% year over year to $136 million, marking Grab's 15th consecutive quarter of EBITDA growth. Some additional notes: profit for the quarter was $17 million, improving slightly from $15 million prior year. Adjusted free cash flow was $283 million on a trailing 12-month basis, reflecting better cash flow management. Deliveries and mobility segments both showed solid revenue growth, 23% and 17% year over year respectively, with deliveries GMV up 26% and mobility GMV up 20%. The financial service, this is the one that I'm very interested in. I want this to keep growing. This grew 39% year over year to $90 million, with the loan portfolio expanding 65% year over year to $821 million despite segment EBITDA losses. Cash liquidity remains strong with $7.4 billion gross cash and $5.3 billion net cash at quarter end. Guidance for the full year 2025 revenue is raised to $3.38 to $3.4 billion, which is about 21 to 22% growth, and adjusted EBITDA guidance to $490 to $500 million, 57 to 60% growth. Now, we're currently seeing fast revenue growth and new member growth. That's 2 very promising signs for the long term. But this company is barely profitable. Now, this is fine. The company isn't focused on scaling profitability right now. They're mainly focused on growing dominance in the region by expanding product offerings and implementing aggressive acquisition strategies. Once they focus on scaling profit, I believe this stock will start to explode. But until then, I still see a great opportunity to continue to accumulate more shares. So that's what I'm doing. And look what we have here. GoTo and Grab are back in merger talks after Indonesia's sovereign wealth fund joined the discussions. The deal would combine Southeast Asia's 2 dominant ride-hailing and food delivery platforms and could control over 90% of the Indonesian market. Talks are ongoing with no binding agreement yet. Now, the deal could value GoTo at around $7 billion. GoTo is 73% owned by foreign investors, including SoftBank Group of Japan and Taobao China Holding, a unit of Alibaba Group, with the rest owned by Indonesian investors. More news. Grab backs SuperBank mulling Jakarta IPO this year to raise up to $300 million. SuperBank Indonesia is considering an initial public offering that may take place in Jakarta as soon as this year. The Indonesian bank company may seek a valuation of $1.5 billion to $2 billion in a potential listing. SuperBank's backers also include Singapore-headquartered super app platform Grab Holdings. There we go. Grab wants to help SuperBank grow faster and plug real banking tools, savings, loans, and credit into the Grab app. More drivers and users can bank right where they ride and order food. That keeps people using Grab longer, spending more, and gives Grab better data to offer smart financial products to. If SuperBank does well, Grab wins in 2 ways. Its investment becomes more valuable, and its whole ecosystem gets stronger. Grab is building a full digital economy in Southeast Asia. Well, Jefferies raises Grab stock price to $7 on strong EBITDA. Jefferies has raised its price target on Grab Holdings to $7 from $6.80 while maintaining a buy rating on the stock. 15% upside, they say. The revision follows Grab's third quarter results, which showed revenue in line with expectations, while adjusted EBITDA exceeded forecasts due to strength across different segments. Grab has revised its full year guidance upward, with the midpoint of fourth quarter revenue guidance largely aligning with market expectations. Jeffries noted that Grab's management considers its product-led strategies as countercyclical amid low market penetration in its operating regions. And Jeffries also highlighted that Grab has reaffirmed its long-term margin targets for both its deliveries and mobility segments. Evercore has reiterated an outperform rating at $8 per target on Grab Holdings. Following the company's third quarter earnings results, the target represents a potential 32% upside from the current price. Evercore noted that Grab continued to show robust consumer demand despite trade policy uncertainties, grew its monthly transacting users to a new record high, and maintained innovation around new products that drive platform frequency and efficiency. Benchmark keeps their buy rating on Grab. They want to be at $7 per share. And I like this part. The success rate is 59%. That's actually pretty good for analysts. The word on the street in general suggests a strong buy analyst consensus rating for Grab with 702 average price target, 15% upside from the current levels. Grab to make a strategic investment in remote driving technology company Vay. Vay offers affordable on-demand car rental service enabled by remote driving technology. This will allow Vay to scale and expand its operations in the U.S. Now we're getting involved in the U.S. I love it. The initial investment is $60 million, followed by potential investment of $350 million, subject to Vay and Grab reaching agreed financial and operational milestones within the first year. Anthony Tan, CEO of Grab, we believe the future of mobility in Southeast Asia will be a hybrid model that relies on expertise for our driver partners alongside autonomous vehicles and remote driving services. This initial investment will help accelerate Vay's remote driving technology development and create valuable technical and operational synergies for Grab's long-term mobility strategy. It will also support Vay's expansion into the U.S., where they serve a growing segment of customers who prefer not to be car owners and are looking for more flexible, affordable mobility options. Now, Vay launched its remote-driven commercial fleet in Las Vegas in 2024. Built to enable human-machine collaboration, Vay's technology is designed to navigate complex, high-density environments such as Las Vegas Strip. And that's one of the areas that Vay currently operates. And they're just trying to expand throughout the U.S. Well, look at this. Citigroup, 13F, November 10th. Share count up 112% increase in ownership. Wow. That means they must have been around 15 million shares. Now they're at 32, over 32. That's a huge increase. BIT Capital, they went up 395% increase. Now they have a smaller share count, but for Citigroup, that's a big move. And looking at the Grab Holdings institutional ownership over the years and months, look at the steady increase. Love to see it. Well, Grab is building strong momentum across the Southeast Asia by expanding far beyond ride-hailing and into food and grocery, delivery, digital payments, lending, which gives multiple growth engines rather than just one. Its on-demand gross merchandise value in the region is growing at double-digit rates. Because of its diversified super app model and accelerating user engagement across services, the company appears to be moving from early growth toward a more mature monetizing phase, which may reward investors like me who believe in Southeast Asia's digital services growth story.
So what we're seeing is a number of things. One is people are engaging more on the platform, but also cross-selling more also. As they're coming into certain funnels that we have on the affordable side, they're also trying other products that we have, whether it's the group order that you just mentioned, it's the dine-out features that we have also for them to be able to go to restaurants. Right. So there's a lot more products that we've actually been monetizing, and that's producing some of the results that you're seeing.
If you have a strategy where group food orders and shared rides are a driver of demand, do you need big volume in order to make this a profitable exercise for Grab?
Obviously, scale is important. The more scale that we have, the more users using the platform, the more we can actually leverage the cost structure of our business and also scale the big driver base that we have also at the same time. So it does play a role. And hence what you've been seeing is that now over a third of our user base, especially in deliveries now, are coming into what we call more the affordable product stack. And it's a great entry point for them to use. You're looking at over 25 million monthly transacting users just interacting in those affordable products, just on the food delivery side of the business. And it's a great way for us because it enables us to, for those users who are a little bit more price sensitive, to try the product first, get a taste of it also. They're a little bit more price sensitive on the delivery fee, and we've managed to be able to lower the delivery fee for them. But they also get to experience the platform. And once they've experienced the platform, they get to also experience other products like grocery delivery. which is still a very nascent business for us. It's about 10% of our deliveries GMV. And at the same time, also, we're cross-selling them to other products like Dine Out, for an example, for them to be able to go to restaurants at the same time.
It's interesting that you also offer fintech as well and loans, but I've just got to target the elephant in the room is that we hear all these growth stories. We see analysts raising their price target on you, but the shares are down on the day, Peter. And from the conversations you had with investors and analysts, what was it that perhaps there was a little bit of concern about?
I wouldn't say it's any concern. A lot of the investors are really focused on how we are going to finish the quarter, and I've reiterated them that we're on track to finish a very strong quarter. If anything, that reflects on the guidance that we've given out also. We've increased the EBITDA guidance now to $490 million to 500, and that also shows our confidence in terms of how we're exiting the quarter. I've also told them that in terms of our GMV growth, we're continuing to sustain this growth acceleration in our business today. So we are looking to finish strong in the quarter. One of the areas that we're focusing also is the fintech business. We've given out a $1 billion loan outstanding by the end of the year, and we're on target to hit that also. So all the different parts of the business are on track for us to have a very strong finish of the year.